All right, everybody. Good morning. Hope you all are doing very well. Getting started here on Thursday morning. This is going to be my last video for the week. Going to be traveling again tomorrow. Not as much as last time, but be the last one for the week. Wanted to follow up on this new valuation metric, which is still a power curve. It's a derivation of the traditional power curve, but I'll show you again, talking about if Bitcoin is exciting or not. I'll show you how some of these daily changes really can be face ripping and plenty exciting. Again, you can trade, do whatever you want. Never financial advice, but I think that there's some interesting stuff here. So we are looking at the same chart that we've looked at for the past couple days. The idea is finding a valuation metric that will show us when we're getting into rare air nosebleed territory. Again, very exciting. We're starting to finish above the trend. Unfortunately, I don't have a live update for you. This is only as of May 20th even when I pulled this. So we're up to $111,000 now. Congratulations. But I will, or maybe it's down to 110 even as of this recording. Soon enough, I'll get sort of a more live feed in here. It's still not going to change the picture of this chart. So as we talked about, the important thing was trying to analyze daily price changes here and see how it relates to the trend. Okay, so this is the trend. All right, and the change in price would be something like back in 2017. You know, the daily trend would only change $6. All right, so that's the change in the black line with the little play symbol there. So the power trend price, $3,300. Of course, we were screaming above this at this time. Already had topped, in fact, in January 2018, but no one knew that at the time. If you subtract each day, which actually it's not, I got to zoom in to do that. All right, the power trend is only increasing at $6 on a daily basis. But what we can do is we show the actual daily changes. And of course, there are negative days. So when there's gaps here, it's just a negative, just ignoring that. Of course, there's big volatility in Bitcoin. But it seems that we can create a nice channel. And when we get to the daily change matches the yearly change in the trend, this seems to be a top signal. Okay. Where are we now? All right. So again, we're not really looking at the trend. We're looking at the change in trend. We're still sort of in the middle, okay? And plenty of days right in the middle, you know, kind of between the daily and the monthly, right? It seems where most of the data occurs, all right? So the actual change in that green shaded area, the actual change in the price, I gotta just leave my cursor on it because it goes off. Most of the time, it's between the trend line daily and the trend line monthly change in price. When we start to move above that level, it starts to get exciting. Okay, so where are we again today? You know, elevated, and certainly yesterday, today, we've been above that. Okay, I know I don't have it on the fly here. I'll get it soon enough, but just don't have it ready with the engine right now. The price change is certainly elevated. Okay, we're going $1,000, $2,000 a day in actual price change, $3,000, $4,000 a day, whatever it was yesterday. I don't even know. Okay. So we're really getting to now where we're clearly above the monthly trend line change in price, change in expected price, which at the moment is $2,900, roughly $2,877. And as we talked about, I suspect based on this multiple that now we can expect some Maylocks moments as we move into Thanksgiving this year for our American friends, or anybody else who celebrates it around the world, that we might see 1, 2, 3 days of $35,000 price change. That is the actual price will kiss the yearly trend line change in price, okay? But we can evaluate this further, and that's what I'm going to do right now. Remember, I talked a lot about in the last couple of days how we can look at how much into the future we actually pull value from if we move out and look at like the daily trend line, okay? So the daily change in price, at the moment being above 2,000, what was it? What did I just say it was? Well, whatever. Say it's $3,000, $4,000 per day at the moment, all right? You got to go a long way out in the future to find the trend line actually hitting that. Now, granted, there are plenty of days where Bitcoin goes negative on the day, and that is not going to be charted here. Okay, so it's a slightly different analysis than when we run this trend line over the cumulative price value of, we're going on nearly 6,000 days of pricing data in this model at the moment, 6,000 days. Every day is counted in this nice black line, all right, the beautiful power trend, okay? Every single day of pricing action is counted. When we start to do these daily changes, I'm only counting positive changes because negative, first of all, you can't plot it on log scale. Second of all, it just would confuse the picture. So I'm only doing positive, and, at the moment, I'm asking the question about daily. So yes, you could have, gone up 1,000, then fallen 4,000, then maybe gone up 5,000. It can be volatile, but that's also exciting. And I think judging on the way markets typically work, as I've said many times, it's just not going to be that solid, smooth, 100% R squared tracking of a trend line. How Bitcoin is going to be adoption. It's going to have hype. It's going to have booms. Then it's going to pull back. There's going to be frauds. There's going to be flushing out, consolidations. But the interesting question now is to look at this daily trend over time, the trend line, and compare that with the actual daily changes that are positive. All right, so that's the question I want to ask. That's what I haven't shown you yet. Okay, so here now I have on this chart, I'm going to show you the years ahead. All right, so I'm blocking it now, my face. I'll take it off here. So you can see the right-hand axis is about to pop up. It's a different right-hand axis now. I'm going to show you years ahead of the daily trend. All right, and that, of course, what is years ahead? It's the actual daily price change. So what I want to do now is answer this question that I was sort of doing in my head or just off the cuff the last couple of days, is when these green hashes get really high, how many years actually ahead is that of the daily trend? Okay, I'm going to put that up right now. As you notice, these columns, these green columns, they look darn near like a price chart, right? But they're a little bit more extreme, which is always more interesting because that can show us when something is really over the mean or over the expected distribution. So really extreme spikes here in 2011, really two extreme spikes, groups of spikes here, 2013, 2017, some extreme spike action, 2021, very interesting. Still the most extreme is always when it blows it out the first time. All right, so in March 2021, we did, have this interesting double top in 2021. So you still get some spikes, but with, again, this is very hard to see on the fly. Imagine being in the moment, sort of thinning out here. All right, from 2021. And then look, as we're moving into now, a few clusters of spikes just as high as 2021, But of course, I and everybody else that's bullish Bitcoin expects, well, maybe not everybody, but I certainly expect another cluster of really, really bullish spikes when the pendulum swings. Super bullish, perhaps around Thanksgiving, perhaps around Christmas, perhaps even the start of 2026, where grandma is trying to get her grandkids into Bitcoin. So many things now to say about this. What does this number actually mean? Okay, let's look at the values. All right, I told you just talk about the cluster of spikes, but I talked about this before. Okay, so for example, in 2013, what was the top spike? Something like 13 years. Okay, I mentioned this yesterday. So what that means is the daily trend change, and that was like a couple $100 if I recall, as we moved up to to $1,300 here. You'd have to look at the other chart for that, but we're moving up a couple $100 a day, right? A couple $100 a day. So a couple $100 a day compared to the trend. Look at the trend line; it's only $95, which is moving up like less than $1 a day, 30 cents a day, something like that. We're way ahead. We're pulling from the future. I like to talk with my hands, so let me put my face back here. We're pulling from the future. How many years? Well, about 9, 10, 11, 12 years. 9, 10, 11, 12 years into the future. Okay, so it simply means that if you look out 9, 10, 11, 12 years from this date, from 2013, you would start to find a daily trend price change that's something like $100, $200, what it is, right? 2017, nice, beautiful top action here. How far ahead are we pulling? Again, over 20 years. We talked about this as well yesterday. So over 20 years into the future. And of course, as you can see with these, if you just look at the green spikes here, this increases. All right. This is also a power distribution, these green spikes. So let's go to 2021, the top spikes. Like oh, got it. Sorry, I'm gonna zoom in again. So this one's 28. But actually, there's many more than 2017, but kind of around 2017 levels, aren't they? A little bit, a little bit higher in points, but also very close. And obviously, this is expected because the rate of growth declines, just like this power curve itself. It's a complete derivation of this power curve, so everything is to be expected here. But it is a different look. It is a different evaluation of where adoption and price is happening at any one moment. But still, we're over 20 years ahead of the daily price trend, how that would change in 2021. And now you can see our spikes here. I know it's hard with the mouse always moving. I'll leave the cursor. You can clearly see that from 2024 into 2025, these spikes are just as high as 2021. And I expect that they're going to go much higher. Okay, so we're around 20 years ahead of time already in the daily price trend of Bitcoin. So to reiterate what I said yesterday, everybody wants these face-ripping returns. Everybody wants hyper-Bitcoinization. Why don't you turn that idea on its head and say, well, compared to stock market gains, compared to gains in the gold market, these already are face-ripping returns, and we're not even to the peak. Okay, so certainly if you're a trader, if you have that pedigree, if you like to look at screens and leverage and all the rest, which I personally wouldn't recommend, and I don't do it myself, I imagine these are quite fun days. The stock market is not going to give you these types of returns. This is the first time I've done this analysis with Bitcoin. So as I do, I like to compare it with gold and with the stock market. I'll do that. But I can already guarantee you, simply because we know the stock market returns 10% per year on exponential, Bitcoin returns at the moment 45% on power. It's going to be more. It's a factor of 4 higher. But you can start to see how extreme that is now in yearly terms. I think that's a very powerful idea. The dollar gains that you can make on Bitcoin in a day are 20 years ahead of schedule based on this line. Let me back it up. Based on this line. Okay. You'd have to go out to 2050 to find only an $8,000 gain. And we probably had, again, I don't know what the daily change actually officially was yesterday. Was it 4,000? You'd have to find the Greenwich time close, midnight to midnight, but whatever it was, $4,000, $5,000, that's already 20 years into the future, at least. So that's why I'm saying, I know there's unit bias. I know that, my standing recommendation of 1 Bitcoin per family member is pretty hard to do these days, but you can break that up into any number that you want. All right. Bitcoin divides into 100 million pieces. So where will the next top be when we get out to 2025, 2026? Where are these spikes going to end up? For that, I will give you some more charts in the future, perhaps next week. But we'll have to do a trend line analysis itself on these green mountains, on these green columns that spike up. It's a derivation of this nice, beautiful black line, but it's also it's going to be a little bit different because I'm ignoring days where there's negative values, and everybody's got to keep that in mind. And again, remember all these gaps. Every time that you can't see the mouse, when I move the mouse cursor, right, you see that it flickers. Those are negative days. So when I'm actually touching something with my mouse cursor, it will turn green, dark green. But if it's negative, if it's blank, we're negative. So there's a lot of negative days, a lot of negative daily price action. But the upside, massive. And then this doesn't really mean anything. I just did a quick average. We're at least at 6.7 years ahead of time on average for daily Bitcoin price changes that are positive, that are positive. Even that is probably more than the stock market typically, 6.7 years ahead of trend. So then ask yourself, when Peter Schiff tries to tell you that Bitcoin's going to zero, or the trend is not your friend, or gold is the way to go always. This market continually proves otherwise. It continually fails to the upside. And it's very exciting. Again, we're sort of just eyeing this at the moment, but obviously the peaks in 2013 was somewhere around here. Don't look at the play button, but look at my mouse cursor. You see it? See my mouse cursor? It's really when you go crazy on the spikes, around 10 years ahead of schedule here. Somewhere maybe around 15 years ahead of schedule. Let's say 15. And here 20 or 23. And certainly it's not as clear here in 2021. And you have this interesting double top, which I've said many times. I didn't think it was the top because I didn't think double tops typically happen. So it can fool us. But now we got many more spikes coming up. And, I'll have to draw the percentile bands for you to show where we really would be, but presumably, presumably it's going to be well ahead of 20 years, maybe 25 years, as sort of the range of when we'll have to. That'll be a signal that things are really going hot. A daily change in price is 25 years ahead of time. And as we talked about, yesterday, the day before, let me put the yearly on, because usually this is going to hit the yearly now. A $35,000, not usually, but presumably it will hit the top end of the band. A $35,000 yearly change, which the daily could hit. Again, that's even off the chart here. So it's yeah. What I'm saying is the 95th percentile or whatever it is, the very rare air, could be something like 30 years ahead of schedule. So markets continually discount. But another way to look at that is they pull value from the future. And they're certainly tremendously volatile. And that can be very fun for people, and that can give people Maalox moments. So try to have the courage, the fortitude to know that the trend is your friend here. I fully expect it to be just as crazy, just as wild. Again, I don't expect hyper-Bitcoinization wild. It's not that I would complain about that if it did happen. But we have the data. We have the ideas here of why Bitcoin looks like a power curve. And so, yeah. What I'll come back with next week is more analysis on these mountains, basically. 10, 15, 20. The next top probably at least is going to be signaled by 25-year candles. 25 years ahead of time. This one was, which one was it? This one was 25. November 11th, 2024. Which was an 8K move. $8,300 move. Like I said, I think we could go up to 30,000, 35,000 based on this metric here. So very exciting. Very exciting times. I'm sure everybody's excited when they wake up in the morning and they see that Bitcoin, has a few $1,000 price gain over the prior day. But always beware what might happen over the next day. It could drop by that same amount. Here again shows you how this is a very interesting sort of encapsulation of theta, or your time dimension here. So we're shoehorning in compound growth, even though it's a power curve and it's not constant. If I would show you this for an exponential market like the stock market or the gold market or the bond market or basically any financial market but Bitcoin, this black line that I'm highlighting, this black line would be a straight line across the page. It would be a straight line because exponential growth is constant growth. So we would pick a number. It'd probably be something like, for gold, 7%, for stocks, 9% with dividends reinvested. Although if we looked in recent years, it could be as high as 12, 13%. It depends on when you draw the trend line. All markets have constant growth, not Bitcoin. Bitcoin has very high growth at the beginning, slowly declining, but still we're in the 40% range per year right now, 42%. So we get this nice, beautiful curve. But if we put on the actual returns, look, you need time for the actual returns to bounce around this line. If you get to within the last 2.5 years, you can be very, very volatile, wonderfully volatile. Okay, so again, you bought here in end 2022 when Peter Zion was saying that Bitcoin was $17,000 overvalued at $16,000. You're very happy because your return. What did I zoom? Did I zoom in correctly there? Here or here. I think it was end of 2022 actually. Your actual compound growth there. I'm looking at the green B, the black B, but the green green letters. So it's difficult with formatting sometimes here. 110% per year. If you bought at $17,000 and held until today's valuation, it's even more than that because today's valuation is, according to this model, is only 2 days ago. Yeah, $106,000 Bitcoin. So it's even more than that. But look at how the black B there, the green line is very volatile. All right. And it's way outside the scope of this percent sign. It's way higher. That's as you get closer to today, i.e. there's not enough time holding your investment, things can look volatile. So there you go. And this I capped this chart at 200% per year. So let me just show you exactly what I'm talking about. If you bought, see how this green line shoots above 200% per year? If you bought Bitcoin only in March of this year, $84,000, we had this dip, people got scared, more Bitcoin obituaries, all the nonsense. Held it to today, all right, with that very short time dilation, huge increase in price. This represents a 413% yearly compound return. Of course, you might not get that over the year. It depends on what happens. But that's what your return represents annualized at the moment. For this nearly 3-month purchase, whatever it is, not even 3 months. So the point is, things are exciting with Bitcoin. They are volatile, and you can make a lot of money if you want to go short-term speculating, or if you just look at the long-term and then you draw a trend line on that. It's all very beautiful. The numbers show beautiful stuff. So the power trend is the most important thing. All right, this line, the solid black line remains the most important feature in my mind about Bitcoin's growth. 96% R squared, which in itself is not necessarily the be all end all, but it is a great fit. It's a proportionate representation of growth of the Bitcoin network over time. It's not constant, but it grows proportionate to itself over time. Remember, go to my website. You can see the tables on that. Basically, the number is about 12.7% per year. Sorry, not caught myself. If it was 12.7% per year, it would be exponential. It's 12.7% increase in time. For every 12.7% increase in the life of the Bitcoin network, the power trend doubles in value. And again, when we see the trend, when we see the price, when we see supply demand where they meet, really what we're talking about here is the network adoption. And you can analyze hash rate, you can analyze address growth, market cap. That relationship holds, this power relationship holds. And in my opinion, this trend line is way more important than even something like this. All right. So now we're going back to an exponential chart, a TradFi chart, a fiat chart. This is the monetary base. All right. Still only as of December. I think I've extrapolated from March, have I, on this one? Yeah, I've extrapolated to March, but this could be about this level, could be a bit lower. I haven't finished it yet. We're at historical lows still for central bank money printing, way outside the range. Look at that, under the red band. Might pick back up here. Danny asked me that on what Bitcoin did. How I don't know for sure. I don't have any of these specific if this then that. I don't know. You just kind of got to use your eyes and see where we are. But certainly when the spring coils, it's gonna bounce back. The pendulum swings, i.e., they're going to have to do more money printing. They're going to have to lower interest rates at some point. But things are very unstable right now. Very unstable. Because we started out above this trend. By the way, the slope of this curve, if we were to again graph this curve in percentages, it would be a flat line, all right, across the whole chart, and it would be about 10.2% per year compounded. That's in dollar terms the growth rate of the monetary base worldwide. That is central bank money. We grew faster than this black line back in the 70s after Nixon unilaterally closed the gold window. But then from the mid 80s until the global financial crisis, we were on a lower growth rate in the monetary base, which is interesting. But that's what it was. Remember, this is in dollar terms, all currencies in the world, all major currencies, dollars, euros, yen, yuan, sterling, franc. That's what you got to think about when you look at this green line. So a lot of people talk about, central banks just print. It's all about printing money. That's what gives Bitcoin its value. No. Bitcoin has its value for reasons of purchasing power, but it has many, many other features, different utility than central bank money. And the most important thing, I believe, which is represented by this power curve, right, which we can pick out on any chart here, the most important thing is it represents adoption of a network. That's why it looks so consistent and so nice. You don't have this for many other markets. You can get pretty good fits. Like, look, this is a great fit. It's a 99% R squared. It's a 99% R squared for this one. But that's not what Bitcoin is doing. Bitcoin's not really reacting to this. Bitcoin is reacting to users around the world playing with it, getting new wallets, buying some, selling some, developers, miners, all sorts of network effects. It's just not, this is not the main component of Bitcoin's growth. It will be in the future, but not yet. All right, at $2 trillion, over $2 trillion, Bitcoin's a little bit under 10% of the global fiat money. But remember, we got to add gold and add silver. So you're adding at least another 20 trillion on top. Used to be only like 10, 15 trillion, but gold has been going gangbusters the last couple of years. Final one. Paul says, Danny. Yeah, I don't know what you mean by Danny there. Here's one from Alexis. What is the utility of BTC besides speculation? Good question. If it was speculation and preservation of your purchasing power, like I said, I would suspect that Bitcoin would grow a lot like fiat money. It doesn't. It doesn't. It grows like a network, which grows in power, which simply means it's proportionate to itself. And then you got to ask the question, well, why are people even holding Bitcoin? I've done a lot of shows on this over the years. Bitcoin means a lot of different things to many different people. if you were going to say you had value stored in the stock market in the United States, and the United States decided to turn fascistic, all right, so it went fascist, started to deport people, started to close banks, have banking holidays. You started to wonder how safe you might be. Maybe you would want to even leave the country because you didn't feel safe there. I'm not saying that people feel that way. In the old days, you would have to, sell your house, sell your stock portfolio. In the real old days, if you were, if this was a time of war and the only way that great powers were connected were the shipping lines, you would have to convert that into something that would get across borders. So like diamonds, gold, perhaps relatives of, people that left Europe during World War II. Not perhaps, I know for sure. That was a way that they converted wealth from, leaving the old world into America. Diamonds, gold, something you could keep on your person because you're gone. You're going away. You're never coming back. Now, this is obviously an extreme case, but it worked. It worked. Now, today, we have things that work pretty well, like, TransferWise. They do pretty decent transfers. But, of course, that's based on an algorithm of specific people that, someone wants to trade dollars and euros in this country. Someone wants to trade dollars and euros in the other country. It's based on an algorithm, and usually it's on pretty meager amounts. You're not going to get the best rate if you want to really trade a lot. So TransferWise is, and plus you have to trust this one company to do it. Just like in the old days when you would sell your stock portfolio or your house for gold or diamonds or something else and then move across borders, you can do that with Bitcoin. And with Bitcoin, once it's withdrawn in your wallet, you don't even have to send it anywhere. This is why it's such hard supreme money compared to gold. You don't even have to do anything. You don't have to send it to another wallet as you leave the country. You just walk across that border. And as long as you know the seed, your key, you can access those coins across border with a completely different hardware wallet or a completely different software wallet. I would always recommend using a hardware wallet. I would recommend using many different hardware wallets, actually, to diversify. And multi-sig is even better with different hardware wallet vendors, but that's another story. And then you have complete control of your funds. Complete control of your funds. That, in my view, is the most hardcore utility of Bitcoin. And so if you were going to sell your stock portfolio or your bond portfolio in the United States and move to Europe, because let's say the United States is becoming too dangerous. Of course, this is all hypothetical. You could do that very easily, whereas you could not send your Apple stock easily to your own portfolio in Hungary or in Turkey or even in a normal, sorry, I was slip of the tongue, in a more Western European country like Germany or France. Very difficult to transfer Apple shares held in an American brokerage to a European brokerage, although certainly doable. Much harder if you're in, say, a more developing country like Turkey, Azerbaijan. And would you even want to do it if you were in maybe an Asian country or close to China or something? So that's the point. You have deep, deep security and control of your money, and you don't even need to send it. You don't need to liquidate it. You don't need to move it. You don't need to put it under your mattress for a while and then, put some gold in your car or whatever. You don't need to do any of that, and you don't need to pay fees. So that's really in my view, the core function of Bitcoin. And then, of course, when you talk about payments, there are many ways to do that now on the Lightning Network that are basically free. Although to get into the Lightning Network, you need a little bit of friction to do that. But there are plenty of wallets that can help you. And in my view, just keep a decent amount of change in your Lightning wallet, whatever is decent for you. I don't know, $100, $1,000. and just leave it there for when you want to make payments. But mostly at the moment, we are still in, to use your word, Alex, this is the speculation stage. So most people, the vast majority of Bitcoins are being held right now. They're not being traded on exchanges. And of course, it is a risk if someone from the old days decided to unload a lot, even Satoshi. He has 5% of the network, presumably. Presumably, he has about 1 million coins. Almost all of them have never been spent. On the Coinbase prospectus, they listed moving of the Genesis block coins or the Satoshi coins could be a risk, a short-term risk at least on price. But I don't see that as a risk in the long term. It just could be a risk on the short term. So anyway, hope that answered your question. Paul, did I say Jamie? Sorry, I meant Danny. Yeah, I talked to Danny on what Bitcoin did regarding the when this thing starts to turn around right here. And I think it turns around within the year, but I just don't know. I just don't know when. I mean, just saw a headline from Jamie Dimon this morning, said it's right to hold rates, don't go lower yet. Of course, Trump wants Trump wants rates lower yesterday. So, that's how it goes. Thank you, Roman. Appreciate that. I mean, same stuff I'm talking on here, but this is a good one. Lifeboat. So yeah, that was about it, guys. I did talk about this one as well with Danny. I'm very much looking forward to getting the data on foreigners, how many both stocks and bonds they hold as a group, because it's been going down, and from April, this is it's a very retroactive data set you can get from the Treasury. I think probably right now they still only have as of March data, so we don't have even from Liberation Day. But remember, these are the two big holders of bonds that are not Americans, basically, or not individual American entities, pension funds. One is the Fed, which of course is American, but it's the monopolized central bank. The other is foreigners. Foreigners hold 23% of the U.S. debt as of March. The Fed holds 18% of the debt. The Fed has been historically as high as 30. Foreigners have been as high as 35, roughly. I suspect one of them is going down. No matter what Trump says, I suspect it's going down for a while, and that is the foreigners, the black line. And I suspect the other one will have to go up, i.e. the Fed will have to print more money at some point. That is the green line. We saw they could do it quickly when something happens like COVID. Like they were really trying to normalize. Again, when Bitcoiners tell you that all the Fed does is print money, that's not what they were doing here. They were not printing money for 3 years, from 5 years. 4.5 years, from 2014 June to 5 years, actually, full 5 years. And then they had that repo spike in September, which you don't really see here, but people were scared to get rid of their reserves anymore. And then COVID gave them, so they started to turn it around, started to print more money from September 2019, you see. And then the COVID just bailed them out, at least on the idea to print money, and they exploded it. Certainly, anything could happen. War, I don't know, that makes them change their tune quickly. That's the crazy thing about all this. That's about all I had today, guys. If you have any other, if you want to see any other charts, let me know. But these are the ones I'm keeping my eye on at the moment. And this is a fun one. I really think this is a fun one, a new way to look at it. Bitcoin is exciting as any asset. We can have $7,000 price changes, $8,000 price changes in a day, when the trend, remember back in 2021, the trend was only $25 of a daily price change. Here, we're at $100. All right, so this black line increases $100 a day. And we just had whatever it was. Someone tell me, I don't even know, $4,000 price change last night. So Bitcoin is exciting as you want to make it. And it's going to continue. Thank you, Paul. All right, guys. Well, I'm going to leave it here today. I promise I will be back next week with more on this. I think we need to analyze this more, these mountaintops, and see really where, when these spikes really get crazy, what is the years ahead that Bitcoin is performing on a daily basis to give you those spikes, because that's, I think, what we need to look at for the next peak, which is clearly coming within the next year. Thank you, Roman. Yes, happy all-time high. Congratulations, guys. Diamond hands. Enjoy yourselves, and talk to you next week. Thank you, Max. Take care.